If you've always been thinking to invest, but you are scared or feel intimidated, and you think that you don't have time for it, then this video is for you. Hi lovelies, welcome or welcome back. My name is Geraldine B. I talk about health, parenting, and mindful living. That means living a minimalist kind of life, saving and investing money. So if you haven't already, please consider subscribing. Now let's get into it. Most people do not invest in the stock market because they are scared or they think that they don't have time for it. Let me tell you that your feeling is valid. If you think that it's too risky, that you don't want to lose your money, then I feel you because I was there. Nobody wants to lose their hard-earned money, right? But the purpose of this video is to simplify things so that if at the end of this video you will decide whether to invest or not, then only after you fully understand how stock market works. Now, just a disclaimer, I'm not a financial expert. I am just a friend, a simple mother who is trying to make things work for me and for my family with all this financial goal that I have. So if you do need an advisor, a financial advisor, by all means, go ahead and get one. Most of the time, our fears paralyzed us. And because of this fear, most people hide their cash in a savings account because they don't want to lose money. Well, guess what? If you do that, you're already losing money because bank invests that money on your behalf, but you're not gaining anything. You lose your money because most savings account has 0.01% growth. So that means because of inflation, you are already losing money. Now, what is an inflation? In a simple way, inflation is a general increase in prices and fall in the purchasing value of money. So there's two components here. One is there's a general increase of the price of the cost of goods like houses, cars, or bread, groceries, right? And the fall of the value of your money. So that means if you're going to hide a $10,000 in your savings account in the next 20 or 30 years, that value of 10,000 is no longer the same. To put it in a simple way, our $1 today is not the same as its value 30 years ago. To illustrate, in 1930, bread cost 0.09 per pound, whereas in 2010, the same amount of bread costs $2.99. Another example is the housing cost in Toronto, which is in 1985 cost around $109,000. In 2015, the housing cost there is roughly $500,000. That's the power of inflation. Now, next antidote to fear is the realization that bear market do happen, and it's pretty normal in the stock market. Bear market is a prolonged price decline of around 20%. Like for example, if you buy a stock of $50 and then the next week, next day, the price will drop to, let's say, 49, 48, 45. Don't be scared. That's pretty normal. And it is shorter in duration, around 9.6 months. So that's the time that the price is dropped before it rises again. And that's the bull market. Bull market is when stock price increases again. And usually the average duration of bull market is around 2.6 years. So it's longer than bear market. So knowing that market crash or volatility reduction of price is normal, just wait for it to bounce back again for the bull market before you sell that. So you're not really losing money, right? Next antidote is our investing strategy here is long term. That means we invest and we let our money work for us in 10 years. So we will leave our money in the stock market for 10 years, long duration, so that we will give enough time for that money to grow. So we buy and hold. We buy stocks today and we forget that they exist. Don't touch them. Don't sell them, especially if during bear market. But even if during bull market, the longer you hold that stocks, the better is the return. The other antidote is to only buy stocks from blue chips company. Those companies with reputable history in the stock market. For example, TD, which is a bank in Canada, in 1994, per share of TD cost $2.4 each. Today, that costs around $87 per share. So you know how the capital gain grows over time. Personally, I don't buy stocks which are new to the market, that I just read it somewhere that has promising return. I don't buy that. I always want to make sure that I am buying reputable companies. Banks, for example, that people are always going to banks, right? People are using banks for mortgage, for loans, for every transaction. And companies like energy company, Fortis, Enbridge, Pembina, and a lot more. Why? Because you know that these companies are essential. I mean, people cannot live without energy, without electricity, without heater during the winter. So you know that this company can go a long way. And that you know that if you buy a stock today, it has a promising gain in the future. Another antidote to your fear is to buy an index fund. And in my first video, I talk about that. I will put a link below. An index fund is basically a basket of diversification where instead of buying one individual stock, like just buying Apple, you can buy an index fund, a basket of a lot of stocks in there. Like there's an Apple there, for example, there's Enbridge, there's BMO, there's TD, a lot more stocks, so that you won't be that affected of volatility. It is more stable. It won't give you that immediate return, but it will not also drop its price that much. So that's a little bit of a stable investment. And finally, people do not want to invest because they said, I do not have time to do it for myself. Well, guess what? If you have time for social media or to browse your Instagram or Facebook, then you have the time to invest. We were there before, my husband and myself, we entrust our investment to the banks. And I don't want to talk more about that, but there's a lot of hidden things going on in there. So we decided to do a self-directed investment. We do a hands-on because we work hard for those money. So why are we entrusting other people to make it grow on our behalf? Actually, ideally, according to professionals, you only check your portfolio, your investment quarterly to avoid the temptation of selling your stocks. Because sometimes we have the temptation of selling our stocks if we think that we've gained, for example, $10 per stock. But if you hold on to that, then you could have gained $20 per stock or more. So just leave it there. And we are not that kind of people who are sitting in front of our computer and watch those volatility rise and fall, right? We don't do that for most part. So that's it for today. I hope that you have enjoyed this video. I hope that you finally decided to either invest or not. If you decide to invest, click a link below. It's an affiliate link from Questrade, my favorite online brokerage. That means that I will earn a little commission whenever you open an account without an extra cost for you. So thank you again for sticking around. I really appreciate your time. And together, let's be grateful and be a good steward of the resources that God has given us as we continue to work on towards our goal. Bye.